Welcome to IP Data's update on housing market conditions for September 2014. The Australian housing market continued its run of capital gains in August, with capital city dwelling values rising a further 1.1% over the month. The latest data from IP Data CoreLogic takes dwelling values 4.2% higher over the 3 months of winter, which is the strongest result across the winter months since 2007. Once again, Sydney and Melbourne have been leading the marketplace for capital gains, with dwelling values up 5% and 6.4% respectively. Every other capital city has recorded a much more sustainable pace of growth. Canberra was the next best performing market, with dwelling values up 2.4% over the past 3 months, a growth rate entirely attributable to Canberra's detached housing market, which offset a 2.1% fall in local unit values. Adelaide dwelling values moved 1.5% higher over the rolling quarter, while Brisbane values were up 1.3% and Perth values were up 1%. Both Darwin and Hobart recorded a decline in dwelling values over the 3-month period, down 0.6% and 0.8% respectively. The two-tier market conditions have been very evident over the past 2 growth cycles, with Sydney and Melbourne showing a cumulative 50.1% and 46.1% increase in dwelling values since the beginning of 2009. Across the state capitals, the next best performing city was Perth, where values are up a comparatively low 15%, followed by Adelaide, where dwelling values have moved 9.9% higher, and Brisbane with a cumulative 5.3% increase. In Hobart, dwelling values are actually 1.4% lower since the beginning of 2009. With spring now officially here, we're expecting listing numbers to start their seasonal ramp up, which will provide a real test for the housing market. We're expecting interest rates to remain at their historic lows for at least the rest of the year, and it's likely buyers will continue to be active as more houses and apartments are listed for sale. Year-on-year transaction numbers are 9.9% higher compared with a year ago, highlighting that buyer demand continues to climb. However, the rate of growth has been consistently trending lower since the end of last year, indicating that some steam may be leaving the market. In all likelihood, we'll continue to see the rate of growth in property sales increase over the spring selling season as more properties get listed for sale. We've also seen consistently high auction clearance rates over the winter months. The combined capitals average hasn't fallen below 60% since March 2013. Over the 3 months of winter, we've seen the weighted average capital city clearance rate recorded at 70%, which is 2 percentage points higher than the 3 months prior and 2 percentage points higher than over the same period a year ago. Sydney's recording higher clearance rates, averaging 74% over the winter months. Our private treaty metrics have levelled out over the month, with typical capital city properties now selling in 40 days compared with 36 days at the end of March. A year ago, capital city homes were taking longer to sell, though, at 47 days. Vendor discounting rates have reduced slightly, recorded at 5.4% at the end of July compared with 5.5% 3 months ago. Discounting rates are tighter than a year ago, though, when vendors were typically reducing their asking prices by 6.1%. All 3 vendor metrics are indicating that housing market conditions still broadly favour the seller over the buyer. Now let's have a look at the housing market conditions across the capital cities. Sydney's continuing to outperform the capital city average, with dwelling values rising by 5% over the 3 months to the end of August. The result indicates a rebound in the trend rate of growth over the winter months and sets the tone for further strong housing market conditions over the spring season. Homes are typically selling in just 32 days and auction clearance rates are nation-leading, consistently tracking above the 80% mark. Since the commencement of this growth phase in June 2012, we've recorded a cumulative 27.2% rise in Sydney dwelling values, which is the highest total capital gain over the current cycle across the capital cities. Melbourne's recorded a slightly higher rate of growth than Sydney over the winter months, with dwelling values moving 6.4% higher over the 3 months to the end of August. Over the past year, we've seen Melbourne values rise by 12.4%. However, unit values have only seen half that level of growth at 6.2% over the past 12 months. Homes are taking longer to sell than in Sydney at 46 days, which is also higher than a year ago in Melbourne when homes were selling in 44 days. Brisbane's housing market has continued to defy expectations of an improvement in performance. However, values are continuing to show a modest rise. IP Data recorded a 1.3% increase in Brisbane dwelling values over the 3 months of winter to take the annual rate of growth to a relatively low 5.4%. Brisbane home values remain almost 5% below their previous price peak, which was recorded back in November 2009. Importantly, we have seen a significant pickup in transaction volumes across Brisbane. Year on year, there's been a 20% lift in the number of sales, which indicates a substantial lift in buyer demand. Adelaide recorded a 1.3% increase in home values over the 3 months of winter, taking the annual capital gain to 5.9%, which is a distant third highest annual growth rate after Sydney and Melbourne. Buyer demand's also increasing, with transaction numbers up 9.9% year on year. Our vendor metrics are also indicating an improvement in housing market conditions across Adelaide. Compared with a year ago, homes are selling 8 days faster at 52 days on average, and discounting rates have fallen from 6.8% in 2013 to 5.6% this year. Perth's housing market has continued to see home value growth moderate, with values rising by just 1% over the past 3 months and by 3.5% over the past 12 months. The rate of capital gain peaked around mid-2013, and since late 2013 we've been seeing transaction volumes drifting downwards to be 1.7% lower year on year. Reinforcing the fact that the Perth market is slowing down is an increase in average selling time, which is up from 32 days a year ago to 50 days, and vendor discounting rates, which have increased to 5.2% over the year. Hobart values dipped over the 3 months to the end of August, falling by a bit less than 1%. Over the past year, Hobart values have recorded a gain of 2.8%, but they remain 9% lower than the previous 2009 peak, which is the largest gap compared to the market peak for any capital city. We've seen some encouraging signs, though, that life is returning to the Hobart market, with transaction volumes moving higher and some subtle growth in values over the year. Dwelling values also fell in Darwin over the most recent 3 months, down by 0.6%. Over the past 12 months, Darwin values have risen by 4.4%. A significant reduction from the recent peak rate of annual growth, which was recorded very early in the growth cycle back in November 2012 at 13.1%. Conditions have been tapering in Darwin after consistently high rates of capital gain over previous cycles. However, Darwin remains the highest yielding market, with gross yields averaging 5.9% and 5.8% respectively for houses and units. The Canberra housing market showed a winter bounce in home values, recording a 2.4% rise over the 3 months of winter. The capital gain was recorded entirely within the detached housing sector, with house values increasing 2.8% over the 3-month period, while unit values fell by 2.1%. We're seeing progressive weakness across the Canberra apartment market, which can be attributed to high supply levels and a downturn in rental demand. Buyer demand is about the same as a year ago, with year-on-year transaction numbers across Canberra being roughly level with the same period a year ago. Overall, the capital city housing markets are very much divided between the strong performers of Sydney and Melbourne, the markets that appear to have already moved through the peak of their growth cycle, which are Canberra and Perth and Darwin, and those that are still early in the growth cycles, Brisbane, Adelaide and Hobart. The winter months have been surprisingly strong, likely influenced by the recovery in consumer confidence following the pre- and post-budget slump in consumer sentiment. Consumer confidence levels have regained substantial ground since the May dip. Of course, very low interest rates and the prospect of rates remaining on hold for some time yet is also helping to keep buyers active. The cash rate has been at the historically low setting of 2.5% since August 2013, and there's no indication that the RBA is inclined to lift rates anytime soon. In fact, variable mortgage rates have drifted lower over the past few months, providing some of the best borrowing conditions on record. The low yield environment is very much evident across the best performing markets of Sydney and Melbourne, where high capital gains have compressed rental yields significantly, hasn't been enough to discourage investors in these markets. Housing finance data shows growing investor demand in these locations, with investors now comprising 47.8% of all new mortgages in New South Wales and 39.2% in Victoria. Investors should use some caution in these markets, where the growth cycle is very mature, new apartment approvals have also been very high and yields are also very low. Affordability has also deteriorated in these markets, with first home buyers finding it more challenging to enter the marketplace after such significant capital gains. According to the Australian Bureau of Statistics housing finance data, new first-time buyer loan commitments account for just 7.5% of New South Wales mortgages and 12.5% of Victorian mortgages. Looking forward, the spring selling season will provide the next test for the housing market. We're expecting listing numbers to ramp up over spring, providing more effective supply. Whether this new supply is matched by an increase in buyer demand is yet to be seen, but if the winter months are anything to go by, the spring selling season is more than likely to be an active one. Thanks again for tuning into RP Data's Housing Market Update. You can find more housing market information at our research blog, which is easily found from the RP Data website at www.rpdata.com.